Good evening, all analysts and investors in the post-result conference call. So, as far as business of the bank is concerned, we have grown by 11% and reached to 11.64 lakh crore. In 11%, deposit has grown by 10% and advances have grown by 13%. In a deposit of 10%, our saving deposit has grown by 7%, current by 12%, and as a result, CASA has grown by 8% and the term deposit has grown by 11%. In the advances, we have grown by 13% and on which RAM has grown by 13%. So RAM means retail, agri and MSME. Under the RAM, retail has grown by 14% and under the retail, our housing loan has grown by 12%, auto loan has grown by 46% and personal loan grown by 30%. Now, agri. Agri has grown by 16%, of which gold loan has grown by 28%, investment credit has grown by 7%, agri-allied has grown by 58% and SHG by 40%. MSME has grown by 7.5%, of which micro is 18% and a small is 2%. And corporate credit has grown by 10%. So this is our business. Now coming to the financial numbers, the operating profit of the bank has grown 1% on a YOY basis and the net profit has grown 52% on a YOY basis. The operating profit growth is back on the NII growth, which has grown by 6%, and the non-interest income we have grown 21% in fee-based income. Under the fee-based income, processing fees has grown by 9%, cross-sale by 33%, PSLC by 318%, and PFMS by 45%. As far as 9 months are concerned, the operating profit has grown by 11% and the net profit has grown by 52%. So this current quarter, the operating profit has grown only by 1% because of one major reason, the wage revision provision. So we have made as you all know that the IBA has agreed for 17% wage settlement. So what we have done, we have made up 17% wage provision. In addition to 17% provision, we have also made provision for retirement benefits. So basically leave encashment, gratuity, or a pension and all. So in all, actually, in the current quarter, we made a provision of 562 crores on account of wage revision. So currently, we are holding a total provision of 1,251 crores, is against 689 crore of last quarter. So this 562 crore for the normal amount, which we are expecting per quarter, will be between 200 to 225 crores. So 562 minus 225, so close to 340 crore will be the additional cost in this quarter. If you add in the quarter, the operating profit naturally would increase in the quarter. Now, after that, when you come to the margins and all, so point is that the margin which was 3.52 has come down to 3.49. So there is a 3 basis reduction. Of course, our yield on advances have grown from 8.75 to 8.78, 3 basis. Likewise, our yield on investment too has grown by 6.77 to 6.80%. So that whereas the cost of deposit has grown from 4.89 to 4.99. And as a result, there is a reduction in the NIM by 3 basis. So what we have done is basically earlier you know that at the beginning of the year we said that we will be having a margin of 3.41% plus minus 10-15 basis. So as against 3.41% margin, plus minus 10-15, we are at 3.54. So virtually on a positive side, we are 13 basis higher than what we have guided earlier. Current quarter has come down, but you see we could be able to maintain our domestic CASA above 41% sequentially basis also. So our endeavor is always be to contain our cost of deposits, and that containment could possible only through CASA. And so far we are successful. Of course, naturally you all know in a increasing in interest scenario, the asset get repriced earlier and the liabilities follows. So that is the liabilities repricing. And because of this wage revision provision, the cost income ratio is also from 44 to 46.
तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉलला होल्डवर ठेवला आहे. कृपया लाईनवरच राहा. The person you are speaking.
Sir, please unmute yourself and speak.
Has come down. Collection efficiencies we are maintaining 95. Over recovery was around 2,500 odd crores, and the slippage is 1,600 crores. So we have maintained our recovery more than the slippage, which we are continuously guide you. In 9 months also, that as a recovery is 6,800 crore close to, as against the 5,500 crore of a slippage. So in 9 months also, we are more than this. And we said that we will be having 8,000 crore of a recovery, 2,000 per quarter. So this quarter too, we are expecting a 2,000 crore recovery. So our practice of recovery more than slippage will come down. And as a result, our gross NPA, net NPA and PCR has improved. So gross NPA has come down from 4.9 to 4.47. Likewise, the net NPA 0.6 to 0.53. Now the two things, the slippage ratio and the credit cost. So the slippage ratio has come down to 1.28%, and the credit cost has also come down from 0.79 to 0.76%. So that trend we expect to continue. Now next is a capital adequacy ratio. So as against 15.53%, we are at 15.58%. We have raised 4,000 crore of a QIP. So the 4,000 crore means around close to 1%. So what happened because of the RBI guidelines for increase in risk weight on NBFCs and a consumer loan, it impacted 57 bips to us. Besides this, the credit growth. These are the two factors. As a result, our capital adequacy is 15.58. But if you add the 9 months profit, it will become 17.11. So 153 basis point is the impact of 9 months profit. So if you CET capital also you see 12.36 plus 1.53, 13.89. So in a bank where 17% capital adequacy and CET is 14%, the bank that way is adequately capitalized. So this is a financial numbers. Now I request my colleague Bajaj to give some overview about the digital, what we are doing, and then we will be open for question.
Thank you, sir. Good afternoon, everyone. We are continuing with our digital transformation journey. This quarter, we launched the 15 journeys and put against the 12 journeys during the Q2. So put together product, processes and portals, we have now close to 78 journeys. And as per the bank strategy, we are creating all digital channels plus onboarding the customer on digital channel and then making them to use these channels. So with that, we are having all the net banking, debit card, mobile banking, all these digital channels, the users are increasing and transactions are increasing. If we see the mobile banking, the users have gone up by 47% from 1.08 crore to 1.59 crore. Transactions also have gone YOY 26%, which was in December 22, 1.38 crore. This time it is 1.74 crore. Same on the UPI side also, the users have gone YOY 38% from 1.19 crore to 1.64 crore. And the transactions also have gone up from 54 crore to 93 crore, which is YOY 72%. Same way, the user on the net banking have gone up by 38% from 74 lakh to 1.03 crore. Debit card 10% from 2.93 to 3.22 crore. Credit card users have gone by 19% from 1.56 to 1.86 lakhs. UPI QR code, whether it was our for the CASA purpose, we have very much focused on that. That has gone up by 311% YOY. It was 8.78 lakhs in December 22. Now it is in December 23. It is 36.07 lakhs. Same way the POS also have gone up by 47%, which is YOY is from 14,772 to 21,725. Digital migration also last the year it was December 20 it was 83% digital transaction, which has gone up to 87%. Even the quarter on quarter 1% from 86 to 87, and 4% YOY growth is there. Same way the digital business, which was December 22, it was 2,875 crore. It has gone up to 52,884 crore, which we are targeting 70,000 crore. The target, not only in the deposit side, it has even grown in the both RAM sectors, and we are planning another 8 to 10 journey during this quarter also from this March quarter. Same way I told you the last time, the bank has taken various digital initiatives, the DLP, digital lending platform, tab banking, omni-channel, analytics center of excellence, branch center of serverization, middleware, Eximbil new module. To add this quarter, we have added one more thing, that is EOTS up to 10 lakh rupees, which is non-discriminatory, non-discretionary. That is for the ease of customers doing the EOTS. It can be done sitting at home also. Apart from the death claim settlement portal also we have launched, and it is now stabilized. With that, if any question is there, we can take up. These are the various new initiatives bank has taken on the digital enablers and initiatives.
Now we are open for question answer.
Yeah, thank you, sir. Now we will open up the floor for questions. But first, I would request all the participants to limit their questions to 2 per participant, and for more questions, they can join back in the queue. We have first question coming in from Mr. Ashok Ajmera. Please unmute yourself and ask the question.
Good evening, sir. Jan Saab and all other executive directors and the GM present there. Yes, compliments to you, sir, for yet another good quarter of very good results, a very good performance overall, and even the the credit growth also is in line with the guidance, or might exceed from the guidance if we consider this current quarter also, which will be ending in March, I'm sure. Sir, having said that, you said that on the employees, but for employees cost, because of the increased provision of based on 17%, the operating profit is much higher than the last quarter would have been. But if I see it in the employees cost, the increase is only 160 crores in this quarter vis-a-vis the last quarter, from 2,176 crore to 2,335 crores. So where the burden of this additional cost has gone in the P&L?
Okay. Thank you, Ajmeraji, first. Second, there are two places. One is the salary and the employee cost, right? So what is our normal expenditure is around 1345 crore or so. Right? So last quarter also we have made an additional provision 271 crore because to catch up the provision of 15% earlier, right? So that is why on a sequential basis it is not appearing, but fact remains our expenditure is 1345 crores. We have made a provision for 310 crore to catch up the 17%, and also the 253 crore for retirement. So both this 679 is out of 679, 253 is on account of this.
So sir, basically what I am trying to understand is that from the next quarter, our wage, this employee cost, which is 2,335 crore, where it will go? Come down. How much will it be? 1,700 crore, 1,000? Because if you add this 200 per quarter additional, and if you reduce that 500 extra, then will it be 1,700 crore, 1,800 crore?
So my point is that 562 minus 225 is a normal. So this 337, if you exclude, it will come the normal number.
Okay.
Some plus minus can always happen.
Means still about 350 crore chances are there of its reduction.
Yeah.
Yes.
So one eventuality can come that in case the pension, some some amount has to be paid, then we have to add.
Yeah,
based on the
actuarial, but that will be, I don't think more than 25-30 crore or 50 crore extra. 20-30 crore.
Otherwise, whatever is presently information available to us, we have provided.
Sir, I mean, in spite of this on record, the operating profit little at the cost of allowing it to go down, you have made, as per note number 19, an additional provision of 399.72 crores over and above the requirement. So, what was the need? Are you anticipating some account to slip, or are you trying to take care of the next quarter? Are you having sensing something for the next quarter for which this additional provision is made? Otherwise, this could have been saved actually, and the operating profit would have been more by 400 crore.
No, this provisioning will not is the operating profit, Ajmeraji. This is the below the operating profit number, right?
Okay.
And this what happens? We do this provisioning based on our portfolios and all. So we are continuously doing that.
All right. So it was below the profit. It has not affected the profitability.
OP only the wage area impacts the OP. Because
now, sir,
we are providing wage area or provision. We all is above the line for us.
Yeah, you have been very prudent all the time, sir. Sir, one question is on this, which is there in every bank as per RBI's revised this guidelines and circular. Number one, especially in those accounts, how much total, how many bips effect is there on our bank on the increase? If you look at the capital adequacy as well as the cost because of the CRR and other conditions, what is the impact and how much impact is passed on to the customers like NBFCs and this thing, and net effect which we have taken, net impact of that?
So, Ajmeraji, what the RBI has done? RBI has then increased in the risk weight by 25% on the existing. Suppose in a AAA you are having 20% risk weight, as against 20 you will be 45. Likewise, those who are 30, 55 or 50, 75, right? So as a result, there is a 25% increase in the RW of NBFC other than housing, and also the 25% on the unsecured consumer loan. So as a result, what happened over RW has increased, impacting around 57 bips. 57 bips for 50 bips. Now the second question of yours is whether we are able to pass on the increased cost because of this. So what happens in NBFCs also, because we are having AAA, AA and A, so it cannot be passed on uniformly to all, right? So because we are living in a competitive era, so wherever the new proposals are coming or where the proposals are coming for repricing, we are trying to get something extra.
Sir, last question in this round is on the treasury operations, where the segment-wise, if you see, there is a little reduction in the treasury profit as compared to loss. Though, even though the profit is good, I mean, it's not that. So now, considering whatever is happening, RBI says that there is no scope of further reduction for the time being, looking at the high inflation and all that. So what do you anticipate in the current quarter now, January-March quarter, any kind of mark-to-market or how is our portfolio has been built to take the advantage of, day-to-day trading or opportunities?
So, sir, Ajmeraji, what the RBI said that the first motto is to contain the inflation. So, inflation is 5.69 last, right? Even the RBI said that the average inflation will be 5.4. Even the last year it is 4. Next year also it is 4.5. And the RBI on record says they will reduce the rate when on a durable basis the inflation will come down. This is India's stand. When we see overseas, you see the US, the rate is softening, even the China is also reducing. So what we have done, and we also know that from the first quarter over, these bonds and all will be part of the indices and all, so there will be softening. So what we are doing, we are increasing our duration or increasing our AFS book. Even you see a 13% on a YOY basis, we have increased our AFS book. And today I am telling you my EFS book holding is this 7.33. which used to be 6.84. So,
Yes.
so good quality asset we built, and continuously bank will get a good return from that. So we expect that the 10-year GSEC, which is around a 7.20, will remain within 7.10 to 25 range. And in the first quarter, that can be softening up because of part of the indices. So that is an opportunity for us to make money, and we are building our portfolio. The one thing is also happened from the April that the new RBI guideline will come into force, where the investment, where actually what happens, now the HTM is a HTM and FS is a, of course, on 1st April you can shift some of the amount to from HTM.
But this time being the interim budget, the clarity may not be there in April. Full clarity may not be there about the government.
RBI has already issued a circular, sir.
Right.
RBI has already issued a circular, and circular is effective from 1st April.
Okay.
So
thank you very much, sir.
Where I am standing today is I am having good holding yield on a AFS book of 7.33, which is more than the current rate was 7.20. So there is no question of mark to market.
Okay. Thank you, sir, and all the best. If time permits, I'll come back again. Okay, thank you.
Thank you, sir. Thank you, sir.
Yeah, thank you, Ajmeraji. Next question we'll take from Gaurav, representing 91 Capital. Gaurav, please unmute yourself.
Yeah, hi sir. Thank you for the opportunity, and again, congratulations for good set of numbers. Sir, I joined the call a bit late, so if you talked about your advances growth guidance for this year and for next year, if you can reiterate.
Okay. So what at the beginning of the year we said that in a credit we will grow 10 to 12%.
Right.
We have grown 13%, and our growth is a broad-based growth actually. In the RAM also we have grown 13%. In the RAM retail also we have grown. All component of the retail have grown. MSME has grown, right? So our growth is a broad-based growth. Now what the RBI said that the GDP growth of the current financial year will be 7%, and even the next financial year also will be a 7%. So we will, the same kind of opportunities we are expecting next year as well, and the way the income level of the citizens are increasing, so there will be a opportunity for consumption loan or housing loan or auto loan. So next year too we want to grow the pace which we are growing, but you see we are maintaining our 62-38, or rather we are moving towards 63 RAM. So that kind of a broad growth we will have. So that in that growth our risk will be mitigated, our margins will be better, our customer base will be increasing, and all our branches will be able to acquire more and more customers. So that will be better for us for our future.
Understood, sir. And sir, on the provisioning side, this quarter we did 1350 crore kind of provisioning. We should do something similar for the next quarter, which will give us full year number like close to 6,000 crore. If there is no negative surprises. Sir, do you see similar kind of number for FY25 also on the provisioning side, 6,000-7,000 crore kind of number for the full year FY25?
Number may come down next year because the net NPA number has to come down. Slippage number is coming down as our SMA numbers are coming down, so number will come down slightly.
Okay. And so lastly, just if you can explain about your employee cost. You were mentioning that you have over provided 500 CR worth. I couldn't understand much what you were trying to say. If you can just explain again, and what kind of benefit you expect to get in the next quarter.
No,
thank you.
What I told that we have made a full provision of 17%, right? Besides 17%, we have made provision on estimated basis for pension and gratuities, also retirement benefits. So put together, I can say we are having around a 21% provision is against the 17. But it's a need. When your salary and everything will increase, naturally your retirement benefit will also be increased. So based on our estimates, we have made a provision.
So sir, are you over provided or not? I think 500.
Not over provided. So we have provided as per the available information.
Okay, so next quarter you won't see 300 crore lower number, which Mr. Ajmera was kind of pointing out.
Next year, next quarter, only one eventuality can come. That is the pensioners also some ad hoc amounts are being given. So actually that number has not come out. If whatever the number will come, that can be extra. Otherwise, our normal provisioning will be 200 to 225 crore per quarter.
Okay, sir. Thank you.
Thank you. Next question we'll take from Rakesh Kumar. Rakesh, please unmute yourself.
Yeah, hi. Hi, sir. Thank you. Sir, couple of questions. So firstly, starting with, the recovery number for this quarter, so we see that in the slide number 29, there is a drop in the gross NPA in MSME and corporate corporate NPA number. So are these very older, gross NPA numbers? Because the recovery number is also looking quite good. So if you can help us understand this drop in the NPA, especially in MSME and corporate.
So what happens basically for corporate or MSME, from where we get recovery? We get recovery from the NCLT, we get recovery from the SURFACE, we get recovery from the OTS, we get recovery from the ARC sale. So these are the ways through which we generally do recovery. So in fact, I'm telling you, more than 50,000 OTS we have done in the last quarter. So because of the recovery and some account of even because of the write-off too, as the number has come down.
Okay, got it, sir. So what is the prospect, sir, going forward on this, sir? If you can elaborate.
So prospect is our net NPA is only 2,500 crores, sir. Otherwise, so gross number is continuously coming down, and it is 4.97. You see, when amalgamation we started from 11.20. On a quarter-on-quarter basis, we are coming down. Now we are all, even though we are very aggressive in our OTS, we are even online OTS we started. So anybody who can even apply for our even the website up to 10 lakh and we'll get a OTS, so that we'll get our money, because when we are having a 95-96% provisions, so let us recover our money.
So if I adjust, sir, the recovery number, what is given in the slide number 28, 1150 crore that we have recovered in this quarter, which is much higher than previous September quarter number. And if we adjust also the interest income number, that there is a quite a lot of drop is there in the credit yield on a sequential basis. Close to around 50 basis decline is there in the credit yield. So
No. Just please don't decline, deduct from there. Otherwise, you will get confused.
No, sir. I'm not reducing the entire number, sir. I'm reducing the 1151 minus your recovery or return of number, which is close to around 418 crore. So 418 crore is already there in your non-interest income. So I have not deducted that number. Excluding that, I have deducted, and I have done the similar thing for September quarter also. So there is so on the normal business, there is a drop in the credit yield number. So two things. So how the credit yield that we are looking at going ahead from here, excluding the recovery number and margin, sir. So these two numbers, if you can guide us, will be very helpful on the normalized basis.
So point is that there is in the slide number 28, you see MOI recovery 215. That has to be done, not the 1100, right? First point, which was 256 of the last quarter. What happens is 215 crore is a MOI recovery which go in the interest income. At the same time, around a 200 crore of interest reversal takes place in case of slippage. So virtually it is nullified both way.
Sir, so basically this 1151 minus 418 crore, which is AUC recovery, where that number is sitting in the
Yeah. That number is 1151 minus 418, 700, which we have not booked as an income. We have not booked as income because the money has come and money will come in a later date. Actually, in NCD we'll get money in a 5 years time, and some year we will give in a 7 or 8 years time. So we have not booked as an income, and this is when the money will come, we'll book it as an income.
Okay, so you have booked only 215 crore this quarter.
In interest only 215 crore. And the 418 crore, whatever cash we have received, we have booked as income.
Okay, so where the remaining amount of 700 crore is lying right now?
That get not booked in our income, but as per our accounting policy and accounting standard, unless we receive the money, we can't book it as income.
So suppose if we receive that number in the next quarter, in the next half, next 2 quarters, so where that money will be going to accrue in the P&L?
That income will go as a recovery in a write-off next time, because we only book 418, the remaining will be booked as and when received.
Okay.
So it's a conservative or prudent policy.
So what is the margin guidance that we are looking at, sir, in the next quarter or so?
So what we have said at the beginning, the 3.41 plus minus 10-15 basis. So 3.41 plus 15, 356. We are at 354, sir. And naturally, in an increasing scenario, some impact will come in the cost of deposit. But our endeavor will always be to protect that. And for that, we told you today also 61% of my book is an MCLR book. So the asset will also come for repricing, when the liability will also come for repricing. At the same time, what we have built in a treasury, the AFS or holding is 7.33, is against 6.84 of last year. So what we are doing, we are building asset where we are getting more income. MCLR repricing benefit will get. So we'll try to match the increased cost. And so far we are successful. 2-3 bits here and there can always happen.
Understood, sir. Great, sir. Thank you so much, sir.
Thank you, Rakesh. Next question will take from Ashwini. Ashwini, please unmute yourself.
Good evening, sir. Sir, the current margins are like a decade high of 3.5%. So do you really think that this can be sustained over a period of time for 2 years? Because even in the earlier times, we used to make roughly 3% margins on a normalized basis. And whatever margins which we are making is because our deposits are repricing slower than the loans. Do you see any pressure from RBI to increase the deposit rates, as the cost or the increase in repo rates have been somewhat passed on the yield side but not on the cost side?
So my point is that RBI never say you increase deposit rate or whatever it is. It is the bank's management which decides the interest rates on deposit or advances based on their ALM position. Now, my point is that as an organization, where we should focus? We should focus on a CASA. So far we are successful to maintain 41% plus domestic CASA. If you are able to control that CASA, what will happen? Your cost will not increase, because if you are not able to take CASA, entire money you have to fund with the term deposit where the rate of interest is high. So what we are doing to increase CASA, we are doing number of things to increase CASA. We have in a state, around 13-14 state government, we have started our office for RNGR. Even 51 cities where the money is there, we have started our resource acquisition center. We are doing number of things through technology. We are giving number of value-added products. So we are doing number of things to bring CASA in our fold, and that CASA will save us as far as the increased cost is concerned. But fact remains, going forward, what will happen is the deposit will not grow, because I am telling you, market is very, very challenging. Very, very challenging. Because if you're not able to get the natural, otherwise our credit growth will suffer. But as on date, we are at a 78% CASA. As on date, we are at a LCR of 140%. As on date, we are having a excess SLR of 43%. And you see, we have built the treasury book. So as on date, we are comfortable. But going forward, slowly, some money will come from the treasury book to the credit book. So we can go 2 or 3% higher. At the same time, we will work for increase in deposit. And I'm telling you that in the last 9 months, we opened around 45 lakhs new account, new saving bank account, and we are entirely working on the CASA part. So of course, deposit is a challenge, but we are working.
So you said your CD ratio is 78%.
CD ratio is so my point is the CD ratio is only LDR, loan and deposit. Other sources are also there. Other sources is, say I raised 4,000 crore of capital. Money is gone to the advances now. So even then my CD ratio is higher. So I have taken some refinance. Even the LDR is showing increasing trend. So my point is this LDR is not whole in totality. LDR is relevant. Maximum is LDR, but other avenues are also there. And where you are having your liquidity. So I'm telling you, still having 40,000 crore plus. So that naturally in advance your return is more than your investment return. So some of the money we'll take from that also, and some of the money we will raise from the deposit also. This is a job of a ALM of a bank.
And sir, the last question from my side. What is the comfortable LD ratio to which you can go to? The maximum loan to deposit ratio.
So point is that the RBI, in addition to RBI has come LDR, RBI, NSFR, RBI has come LCR, right? These are the number of things through which it is controlled. The short-term liquidity, long-term liquidity, LDR, right? So I'm telling you 142% of a LCR where we are sitting is against 130% of the last quarter, and the excess SLR we are having, and we are having the deposit also. So I can say even 1 or 2% higher also we can do more without impacting much. So, but at the same time, what you see, our 10% growth in deposit. So 6,50,000, 10%, 65,000 crore. 13% credit growth, 5,65,000. Both are matching. For us, so far we have been able to match both the things. So the way we are growing, if we continue to grow, will not have much impact on us.
Okay, sir. I'll come back in the queue.
Thank you, Ashwini. Next question will take from Dikshit. Dikshit, please unmute yourself.
Yeah, hi, can you hear me?
Yeah, Dikshit, please go ahead.
Yeah, thanks for the opportunity and congratulations for a good performance consistently. I have 3 questions. Firstly, so ever since our net NPA has gone below 1%, we started doing the provision on the standard asset from last 3-4 quarters, and gradually every quarter that provision is also coming down. So this quarter it was only 400 crore. So do you feel that trend will continue, that provision on standard asset will also come down, and how much excess provisions we have created over last few years?
So 2 things is it's always said that in good times we should create a buffers, and good times also when you grow at 10, 12, 13%, you are virtually seeding the seeds for risk even. So always said that one should buffer at a good time. So we are creating a buffer, and buffer is based on the portfolio, based on our own assessment. So slowly the buffer will also completed. Slowly what will happen that our net NPA also will come down. So bank is getting strengthened in this process. But this I think going forward it will not happen like this.
How much provision we would be holding other than the NPA provisions?
We are having close to 7,500 crore of a standard asset provision, which includes all provisions of whether the standard asset provision or 7 June provision or all other provisions put together.
Okay. Now, my second question was, this quarter if we see our slippages, it was only 133 crore on the corporate side. But what we have read in the paper that the BGR system where we had an exposure of more than 300 crore has defaulted. So has it not been counted as an NPA, or it was already counted as NPA earlier?
So that we counted last quarter itself.
Okay, and that was provisions also we would have.
So we are having 95-96% PCR now.
Okay, yeah. And one last question from my side. So our NPA, net NPA is below 1%, and recently there was some article in the newspaper that RBI is proposing that companies with 1 to 2% net NPA can pay up to 35% dividend or below 1% can pay up to 40%. I know most of the PSU banks are paying 20% dividend payout. Do you feel that it can go up?
Yes. You see, last year we have paid a dividend of 86%. Right? So when we are earning, naturally we have to share the earning with our investors as well. Na?
Okay, but this payout ratio can go up.
As far as the matrix is concerned, we comply all the metrics. Net NPA is less, right?
Okay.
Huh? CRAR also we are comfortable. No emphasis in the matter of our clean report. So we are complying all.
Okay. Thank you.
No RBI observations and all. Nothing is there.
Okay.
Yeah. So before we take the next question from the participant, there was this question in the chat box that there was this news flow around some mis-selling of mutual fund insurance products, and where after SBI, Bank of Baroda, even Indian Bank had suspended basically this business from the zones. Any comments over there? Number one. Second question is that any impact of the recent Tamil Nadu floods during the current quarter in terms of NPAs or any SMF pool build-up which has happened over the years?
So two things you said were the mis-selling complaints on account of mutual fund and all. So this is not related to us, I suppose, and not the case with us, first point, right? The second point is the impact of Tamil Nadu flood and cyclone, right? So in six districts, it is a flood, and four districts, it is a cyclone. So 10 districts basically. So we received the Tamil Nadu government too has declared as a natural calamity, right? And so we are working on that. So started restructuring some account, but we do not have much of an exposure for the crop loan and all in Tamil Nadu, right? So measure comes in a crop loan where the crop loss is between 33 to 50 or more than 50%. We are not having much of an exposure on that account. Second is basically the retail or the MSME. So far, no big proposal has come to us. So some amount of restructuring we have done in Manipur. Small, we have 5-6 branches here.
So is it possible to quantify the restructuring, additional restructuring that we have done during the quarter?
Maybe around 50-60 crore, not beyond that.
Okay. Yeah. So next question, sir, we'll take from Mona Khaitan. Mona, please unmute yourself.
Yeah, hi sir, good evening. Just one clarification on the wage hike provisions. So, how much were we providing, per month till last quarter, and how much is it now?
The point is that, madam, 17% amounting to around 14 months, it is a 998 crore, right? So 70 crore on an average per month. So we said 200 to 225 because with the DA and all can plus and minus always can happen. So that is why 70 into 30 is 210. I told between 200 to 225 crore. That is a normal amount of a wage hike expenditure will come on us. Now, second is related to that is basically an impact on your retirement benefits, because when somebody is retiring, you have to pay him a leave encashment at a higher rate, or gratuity at a higher rate, or a pension at a higher rate. That also, based on estimates, we have provided around 253 crore.
Got it. So it's essentially 75 crore per month or so that you will be incrementally providing,
right,
based on
right.
17% hike.
Right.
But wasn't this higher earlier? Because I recollect an amount of about 270 crore that you mentioned earlier that you were making.
Madam, but how these things happens actually, when you start a discussion with the union association, you don't know whether it will end at 15%, 13% or 17%, right? So suppose the IBA is offered a 13%, we have made a provision up to 13%. Then IBA the next meeting or two meeting later offered 15%, whatever the RBI offered, we made a provision. Finally, they settled 17%, we made 17%. This is how it happens, because you do not know how much it will go.
Got it. So you were, till now you were making provisions based on 15%
Suppose
hike.
IBA has offered 15%, so you already made 13%, so your catch-up provision you have to make every time.
Sure. Got it. And within your loan mix, can you just share what's the MCLR and repo component?
So 61% is our MCLR, 34% is our repo, remaining 4 or 5% is fixed or a staff loan.
Got that. And just one final clarification as well. So you mentioned 7,500 crore of standard asset provision. So this will include your portfolio and account specific provisions as well as those for restructured and general provisions.
Yes. All put together.
Got it, sir. Thank you so much. That's useful.
Thank you, Mona. Sushil, sir, we have one last question coming in from Mr. Sushil. Sushil, please unmute yourself and ask the question.
Congratulations to Indian Bank team for excellent performance and a great QIP. Sir, my question is, which I've repeated in various quarters, you've taken so many initiatives within the bank where technology is concerned, product integration is concerned, shared service which you have highlighted. You started cash management. Can you throw some light on the total digital spend? Have you reached a journey or it's a continuous process? It's always a continuous process, but in the first initiative, where have we reached and when will we see additional benefits of all the rollouts which you have done?
So, Choksi Saab, we said about digital journeys, right? So we said that we will be having a 70,000 crore of a business in the first year. This is what we targeted. Today we are closing 52,000 crores and last quarter is around 23,000-24,000. The way we are growing, I'm sure that we'll be able to cross 70,000 crores, which we decided. So this is a tangible benefit we are getting from the digitization. And our colleague Bajaj has said that 78 journeys we have already started. What happens when you do this kind of journeys? 2 or 3 benefits you will get. First, the entire due diligence will be taken care by the system. So the NPA level or delinquency level on such type of loans are generally lower than when we take state loan and manually we do. For second, your TAT will increase, right? Third one is what happens, all your digital numbers information is available in your system, so you can do cross-selling in future as well. Right? And fourth one is what happens, we also learning every day through digitally. Our team is also learning every day. Our field is also learning every day. So naturally your growth will happen. So whatever investment we have made, we have started getting benefit of that. Now every quarter we are rolling out 9 or 10 journeys, and that will continue to do. In addition to that, we also got a permission from Reserve Bank of India around 3-4 days back to final approval for starting up our subsidiary. So we are started recruiting the people. So very soon this subsidiary will also be in the working position, right? So that will get further the asset or sale or acquisition or a recovery or a debit card or credit, a number of activities we will have through that subsidiary. So it will improve customer experience, it will improve our acquisition cost, and it will get number of benefits to us. Third one is in the digitization. Our colleague has told that we have done besides this number of other things as well from the cyber side, even the cost cutting also, that document management system or server centralization. Lot of things we have done, and now not only we are incurring, we are starting getting benefit of that. So this is the bank, sir. Whatever expenditure we incur, immediately we would like to get the benefit of it. So we'll continue that journey. And as far as total expenditure, Mr. Bajaj, you can tell.
Yeah, actually, the last 3 years we have done close to 1,500 crore. Another 2-3 years we are again committed to almost same kind of every year close to 500 crore, which is almost 300 crore in the capital side and almost same amount in the revenue side, 332 and 242. That is estimated 564 crore is the cost estimated for this financial year, which is revenue side is 242 and capital side 322.
You've done brilliantly on CASA. Do you estimate that cost of deposit would peak out by mid-June or September in current year?
So point is that May 22 onwards the repricing has happened. So I think by June most of the things should have been covered.
Thank you, sir, and congratulations on best wishes for 2024.
Thank you, sir. Thank you.
Yeah, thank you, Sushilji. Sir, with that, basically, would want to end the call, but before that, would request if you have any closing remarks to make.
So thank you all the analysts and investors for your continuous support and the insight which you are giving, which is helpful for us in deciding our policy and coming out with a better result. So thank you once again, and please keep supporting us. Thank you.
Thank you, everyone.
Thank you.